Hi, everyone. In this new module, let's look at credit bureau and the credit score. First, credit bureau. Let's understand its roles and its products. Then for credit score, that's the most important building block in credit risk strategies. First, credit bureau. There are three main credit bureaus, Equifax, Experian, and TransUnion. They collect individual consumers' credit information from lenders, then consolidate that information into each consumer credit report. Consumer credit report is the basis for different credit scores, as well as for many different summary credit attributes. Besides the main bureaus, there are also alternative bureaus. The reason is that there are some unbanked customers, meaning that they do not have traditional credit products such as mortgage or credit card. Also, there are new to credit consumers such as students or new immigrants. Without a proper record in traditional credit bureau, it's very hard for these consumers to access credit. That's why alternative bureaus are formed. They collect alternative credit data such as rent, phone bill, utility bill for electricity or water. If you are paying these bills on time, most likely you are good credit customers. That's why the alternative bureaus exist. They complement the main bureaus. The core functions of credit bureaus are data aggregation and distribution. Think about this. When you apply for a credit, each lender needs to know your credit history, so they need something to assess your probability to repay the loan back. If without credit bureaus, what the lender will ask you is to show each statement of all the credit accounts you have, right? So there's a lot of paperwork. With credit bureau, all the credit bureau file, payment records, right? So they can be provided to lender instantaneously, right? Actually, nowadays, most lenders, they make credit decisions right away. So that's very convenient. It saves a lot of paperwork. It's a great time savings for both consumers and lenders. Next, let's look at what main credit bureau products there are. First is the credit report for each consumer. This report is available for business to purchase. Here, business means each lender. For consumer, generally you have the chance to obtain a free credit report from each the major bureau once every 12 months. You can check with your local regulation. Next main product is the credit score. That's the main product lenders rely on to assess the risk of consumers. That score is also available to consumer, but you have to pay a price, right? But the good news is that take US, for example, in the last few years, more and more lenders, they begin to provide that credit score for free on a monthly basis to individual consumers because once consumers are able to stay on top of their credit situation, it helps them to identify any potential errors, any fraud activities. Actually, that will reduce the risk for lender as well. So it's a win-win situation. So for consumers, basically you can see your scores free with your lenders. At least that's happening in the US. The last category is credit attributes. These are summaries of key behaviors. For example, what kind of credit products the consumer has, what's the total outstanding balance, what's the average utilization of the credit card, and what's your worst delinquency history in the past 12 months. Just for examples, there are hundreds of credit attributes available for lenders to purchase. These go into different predictive models, strategies, and scorecards. So that's about credit bureau, its roles, and its products.